We concluded our previous video by pointing out that the inherent problem in reading the trend, in verifying a change in the trend, in verifying a confirmation of the trend, is the inherent lag of any indicator that is sitting on a bar chart. You're going to face that problem, and furthermore, your best framework for charting the trend is a longer interval. You've got to look at a longer interval in order to get an idea as to what the trend is actually doing, or if the trend is changing. Now, the best indicator, the very best indicator for reading the direction of the Spoos is the premium. But if you try to read the premium using a longer interval, it will eventually fail, because when there is a shift in the premium, it happens in minute intervals, like 5-second bars. Now, we've studied this long enough to know that. You can get a general picture using a 1-minute bar or a 5-minute bar, something like that. You can get a general picture, as this chart is now showing you. But you can't really identify what's about to occur using a 5-minute bar. Why? Well, if you use a 5-second bar, which is far more accurate, there are 60 5-second bars in one 5-minute bar. Interesting. So how can we get the accuracy of a 5-second bar and the benefit of a longer interval of a 5-minute bar using the same chart? Answer: we need to use pivots. Now, a pivot can be identified using a plain vanilla indicator in TradeStation. A pivot is generated by this plain vanilla indicator using what is called left strength and a right strength. Now, when it comes to a high pivot, the left strength is the number of bars before the pivot point that must be lower than the pivot price. The right strength is the number of bars after the pivot point that must be lower than the pivot price. Conversely, a low pivot is defined, the left strength is defined as the number of bars before the pivot that must be higher than the pivot price. And the right strength, the number of bars after the pivot that must be higher than the pivot price. So that's how it's defined. It's very simple. So is it possible for us to then emulate a 5-minute bar using pivots on a 5-second bar? Well, the answer is clearly yes. All we need to do is to set the left and right strength of a 5-second bar to 60. We use a left and a right strength of 60. That means that basically 5 minutes are going to pass by before a pivot or a new pivot can be identified. Now, that doesn't mean that every 5 minutes you're going to get a read on the pivot indicator. No. It may take longer than that, but it will take no less than 5 minutes. So, we can now use a 5-second bar, get the accuracy of the premium using a 5-second interval, but only test the bars at least once every 5 minutes. And when we do that, this is the kind of chart that will come up. Now the question is, what can the premium tell us? There's a lot that will go into this discussion, but as we've made it clearly known in the past, there's a direct relationship between the premium and the Spoos. So, if the Spoos are moving higher, you're getting higher highs and higher lows. The same should be true of the premium. And when it's not, the premium is telling you something. If the market is moving down, you're getting lower highs and lower lows. The same should be true of the premium. And when it's not, the premium is giving you a heads up about something that is going to change. So, on this particular day, let's just walk you through what we see happen here. The market comes down in the first 10 minutes, something largely due to the S&P, more than likely, all stocks on the S&P 500 cash index have not yet opened. But when we finally begin to get some stabilization here, we see a pivot point right here with a read on the premium of 561. Now the market drops and we get an oversold condition. Oversold condition on the premium, and the market begins to move up. And then right at the top here, we get an overbought condition on the premium. And the premium has dropped substantially. Notice the word substantially. When you get a significant, substantial drop in the premium, or increase in the premium from the previous pivot, there's a very, very good chance that this market is going to tank. And you're going to see more evidence of that as we go through here. All right, so indeed, the market does tank, and we get our next pivot point here. Now, at this point, we have a divergence. Now, we call this a divergence because as you look at the initial bars that drop down, 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 and then you come to this point here, this is divergent relative to the most recent lows of the premium, all throughout here. All throughout here. This is a much higher level. This is significant. Okay? It's a much higher level on the premium. So, we anticipate a move up. And that's exactly what happens. So now, if this is a trend change, what should happen is we should begin to see higher highs on the premium as well as higher lows on the premium. We are going to measure whether that is taking place at the time of the pivot. And when we're using a right and a left strength of 60, we're not going to get a lot of them, but we will measure them. And that's going to give us a fairly good heads up as to what is happening. So, let's go forward. We get our first pivot here, and what do we see? A higher low. Pardon me, we get our first pivot here. This is a high pivot. And we get a baseline, if you will. Now, we get a baseline here, but this is also a higher low from this standpoint. Now, our next pivot up is here, and it is slightly higher as well. And it should, generally speaking, only be slightly higher because the price here is only slightly higher. Now we come to this point, and this too is slightly higher than it was here. And where's the premium? It's considerably higher. Now that's good. That's good. This should imply that this market should begin to really take off. And it does. Now we get to a higher read. and we get a higher level on the premium. And we get another lower, higher low here. And what do we see happen? Aha! The premium is now dropped. This is higher than this, so the premium should be higher than it is here. This should be higher than it is here, but it's not. That's a heads up. There's a potential problem here, and we need to take note of that. Doesn't mean that the trend has changed, but it does suggest that something isn't quite right here. We may get a retracement back to that price. Now, we get our next high pivot here. This should be higher on the premium, but it's not. Now, two strikes. Strike one, strike two. Shouldn't be that way. You come to this next point, and the read is slightly higher than the previous read, as it should be. But really, the premium, if this pivot is compared to this pivot, then the premium should be higher than it is here, but it's still lower. So now we have strike three. Something's wrong here. Something's wrong. Okay? Something's about to change. And on our next high pivot, all right, this is slightly higher than this. This is slightly higher than this. The premium here is at negative 557. All right? It is higher than the previous read, but it is in fact lower than it was here. This is 557. This is 556. We are slightly higher, but here we're slightly lower. So something's going to give here. And that's exactly what you see happen. It drops, and for good reason. Now, as it comes down to this next pivot point, everything changes. Now the premium has dropped to a new low. And it's a naked bar. You now have a basis for recognizing that there is something severely wrong about this rally. It does not mean that the trend has changed yet. All right? It does not mean that the trend has changed yet. If you get, now here we come to somewhat of a rule, so pay close attention. If the market is rallying and you get a low bar on the premium that's a naked bar that indicates a retracement, whether or not this is going to be a trend change depends a lot upon how much higher the market moves, because this is in fact forecasting a return to this price. Now, if we return to that price very quickly, there's been no trend change. But if we don't return to that price quickly, and this market continues to rally up, as it does in this case, if we move more than 6 points away from this price, then a trend change is being forecast. And we're going to use 6 points as the basis for a trend change. So that means that if we're down here at 29.25 and we move higher than 25.25, which we do, then we're forecasting a trend change back to this price. So we're now going to move our horizontal line right up there. okay, roughly speaking. Now, how do we know when the trend is changing? That's the big question, because we know that it's going to. This thing has moved up. It's going to result in a trend change. All we need to see for a trend change is a major drop in the premium at a new high on the Spoos. Okay? A major drop in the premium at a new high on the Spoos. That's your signal for a trend change. All right, let's move forward. So, we move up, and what do we see? We're getting higher highs and higher lows. Then we come to this point. We get a lower read on the premium. Again, this is forecasting a drop. Now, this has been very kind to us, because right before the trend change takes place, the market has once again confirmed that this is about to take place. So we've got higher highs and higher lows, except for here. And so all we need to do is see a major drop at a new high on the premium. A new high on the ES. But a much lower high on the premium. And that takes place right here. Because this big bar forecasted a return to this price, and it did. And there you have it. Big drop. There's your trend change. Now, let's go back to our pivot settings. The fact is that these plots are not going to take place for 60 bars. You're not going to see a plot on the screen for 60 bars, at least. So, does that mean that you can't make a decision right there on the spot? Of course not. You immediately know what that read is on the premium. You don't have to wait 60 bars before you act upon that information. You just need to see a higher high or an equal high take place. Okay? That's all you need. 36.25. So we can line this up here. Come on. Okay, 36.50. You finally get a higher read. Now, did you get it here? No, this was even. 36.25. First bar was higher. Then you were divergent. Could you have taken a short trade then? Oh yeah, sure you could. Sure you could. You were divergent on that last bar. And you were divergent on this last bar here too. So if you're using a right strength, say, of 2, you would have seen that. You would have had the basis for taking the trade right there. Now, fact is, it moved up a little higher, 1/4 of a point. No big deal. But the point is, you don't want to wait until these lines plot on the screen for making a decision. This is used just for a frame of reference. So as you're tracking what's going on, you can look back here and say, oh, yes, we're seeing some evidence here that something's not right. You know, we look back here and we see that the premium tanked over here, it dropped again here. Something's going to give, and yes, now we need to be paying very close attention to what's about to occur, because we've already got a strategy planned here. This market's going to drop. We know how far it's going to drop. at least. And now we need to be prepared to take action. So you don't want to wait for the bars to plot on a 5, not using a right strength or a left strength of 60. You don't want to wait for them to plot before you take action. And you don't need to, because you've got the data right there in your hands. Pretty cool. Okay. Let's move forward. Now, something to keep in mind. This is your target. Whatever happens between this pivot and hitting that target is really not all that important, because this has got to hit. So you could get a move up, but if this in fact was where the trend changed, you're not going to get all the way up there again. Now, if you do, does that change the fact that this market is still forecasted to come down? No, it doesn't. You could get a higher high still. All you have to do is continue to read the premium to see whether that's likely. So let's move forward. Now, let's just show you that's in fact what takes place here. But along the way, it didn't come straight down. A lot started to take place here. So let's come down here to this pivot. When we hit this pivot, we get a read, and it's even lower still. All right, that's a good confirmation to the effect that this market is still coming down. Our next major low pivot is right here. But that's up a bit. Now, it's certainly not a whole lot higher. And by that I mean this is still considerably below the higher low pivots that are happening here. For example, this is why we plot these things with the nomenclature S8s. These are higher lows, all right, as opposed to lower lows. Here's a higher low. Here's a higher low associated with this. And now this is a lower low. This compared to this is lower. So it should be lower than this. That's true. It should be lower. But it is still, and it should still be, it is lower, but it is also higher than this. Yet these are so low that they're predictive. So you don't need to be concerned here so much. All right. Nevertheless, all right, we look on the high side, okay, this is a lower high, and the premium is a lower high as well. That's just confirming. That's confirming that the trend is down. It is this bar that is a bit more of a concern, only because it is higher than the previous major low pivot. The SL, this is higher. So this could mean that the market will move back up a bit, and it does. Now when it does, we come to this pivot point, and what do we see again? We see again a lower high. This is higher than this, but this is lower than that. All right, the trend really hasn't changed. What would we need to see in order for the trend to change? That's an important question. But the answer is still fairly simple. It's a 6-point move. So all you need to do, you look at this low here, and you're at about 31. So this market has got to move up to 37. All right? It's got to go higher than it was over here in order for there to be a trend change, a real trend change. And we would also need to see some kind of a low that is associated, a lower low, all right, be lower than this, that would be accompanied by a significant divergence in the premium. So we've got to really, we got to get lower than this, because this is already forecasting. This is already forecasting we're coming back to this price, and we already knew that because we're coming back to that price over here. So 6-point move up, and we got to get a lower low before that can occur. So all of this is just monkey business. Lower. Now slightly higher on the premium. But look at the numbers here. You're at 33.50 here. You're at 34.75 here. Okay? And you are only slightly higher, 2/100ths of a point higher on the premium. Let me expand this out a little bit so it's more easy to see. Okay? Now listen carefully, because this is important. Have you ever heard that there's a direct relationship between the premium and the Spoos? Okay. So if you've got, you know, a point and a half higher and 2/100ths of a point higher on the premium, then really this is divergent. The premium really ought to be much higher than that. Okay? It should be much higher. But it's not. So that's divergent. And you can see that it's also divergent because look at what happened right before that. You had these big spikes up, big spikes up, big spikes up, and then finally a fail. So there's divergence. Yes, it's higher, but it's divergent. This is coming down, and down it comes. Now, notice this. Now, this is a little bit more like what it should be. Look at this low, 622, and this low, 613. What's the difference in the price? Okay, hard to line these things up. Well, in any case, it's about 31.75 it looks like. And we're over here at 32.25. So we've moved up 2 ticks, and we've gone from 622 to 613. So about 1/10 of a point on 2 ticks. Okay? See if that continues to be consistent. We move up to here, and we're at 32.75 compared to 32.25 and low 32.75. So here again, we move up another 2 ticks, and we go from 613 to 604, about 1/10 of a point for every 2 ticks. Okay? Now you see what I mean? This compared to this, all right? Well, pardon me, actually it was this. No, I'm sorry. This was right. Here compared to here. Over a point. And so we should really be at least 2/10 of a point higher on the premium. We really should be at least about 2/10 of a point. And we're not even We're only 2/100ths of a point. So there's a divergence there. And what I just told you is really, really important. So don't forget, it's hard to, keep in mind how the premium is calculated. It's the difference between the cash and the futures, okay? So obviously, the cash index did not move up as high as the futures did. But if the cash was even with the futures, then the read on the premium would be much higher. But it's not, so you know something's not quite right here. All right, now let's go back to what we were saying here. We're at a higher level here. We're at a higher level here on that pivot. It's actually a lower high compared to this, but it still moved up a little bit, and so did the premium. Finally, premium moved up a little bit. Okay, it's at 543 here. The last time we were even close to that was over here. 543 is higher than 546. We're at a much lower level. All right? So what does that tell you? Okay? What does this tell you? 543 is higher than 546, but we're at a much lower level. Okay? There's strength here. There's strength. This is likely going to continue to move up. It is likely that it's going to continue to move up. Now, instead, it drops, and when it does, we come to this pivot point here. Now, this is only slightly higher than it was over here. And read the premium. Look at the premium on this pivot, and on this pivot, and on that pivot. Now we're slightly lower than we were here as well as here, so we should be lower. Okay? We should be lower. Are we? Yes. 612 compared to 613. All right? Price here, 32.50. The price here, 31.75. Okay, actually this was a little bit lower. Okay, so this is lower than this, but this is higher than that. Okay, it's higher than this and it's higher than this, yet the price is lower. That's a divergence. So what should happen? This thing should go up, and up it does. So don't be fooled by the fact that when you look at this compared to this is lower. Well, it should be. Okay? It should be lower. It's a lower price. But relative to this, it's still lower, but it's at a higher. It's a higher read on the premium. And this is lower than this. It's a higher read on the premium. Okay? So yeah, there's your divergence. Now, we finally get up here to the top. And what happens? We're higher. We go up to 34.75, I think it is. Look at where we were here, 34.25. So like 2 ticks higher. Where should the premium be? Relatively speaking, if we just use the previous read, we ought to be at around 520 something. We're lower. We're divergent, and we're certainly divergent compared to the previous big spikes up. So there's your major divergence. Time to short. Okay. There it is. You need to short that. Now, could this continue to go up? Of course it could. But right now, you've got to short this thing. There's no two ways about it. Premium tells you, we already know this is going to come down. So, we need to short that. Now, let's see what happens. Everything that you expected this market would do now takes place. And down she comes, and everything the premium had forecasted winds up taking place as well. Now, some of it goes into the next day, but in any event, that is where you short it. Cool. As we said, there's no better indicator out here. No better indicator than the premium. And now you can use the premium to read the trend. That's pretty powerful. We take the advantage of using a longer interval for when we read the premium, but we use the same accuracy because we're using a 5-second chart. That's beautiful. Now, what's happening to the rest of the day? What should be happening? Okay, we should be getting lower lows and lower highs. And for the most part, as we just track this, that's what we're getting. Now, it steps up a bit right in here, though. Okay, steps up a bit right in there. And what's happened is that right here we get a little move up. All right, we get a little move up. Nicely done. All right, so that concludes this second video. We're going to continue looking at this for several more videos, so that you get a little better feel for how this is working. But in review, we're taking the advantage of reading the premium at least once every 5 minutes. We're doing that using a left and a right strength of 60, but we're preserving the accuracy of the premium by using a 5-second chart. It's beautiful. Now, could you use something less, or could you use something more? We'll talk about that in our next video.